My wife and I bought our house end of 2024, so we've been here for almost a year and a half. And this has been basically our mortgage every month, 3741.72. Property taxes recently went up, exactly what it was, but yeah, that's our new amount right there, 45.36.
My mortgage is went up to $2,500.
My mortgage payment increased from $5,400 to $7,129. And I'm going to explain to you why so it doesn't happen to you.
It's a tale as old as time. Year after year after year, homeowners opening their mortgage statements to realize that they owe hundreds of dollars more every month. Not because they missed a payment, not because they refinanced, but because of the hidden costs that continuously seem to increase for most Americans in 2026, and it's blindsiding people nationwide. Let's talk about it.
Y'all, guess what happened? So my mortgage just went up. My mortgage just went up to $2,500. They just ran my analysis, my escrow analysis. And I wasn't even gonna look at it. But someone told me, like, just look at it, because I already knew I was negative because of what? Because of the taxes.
Y'all, this happens to so many people. First, I think that we need to have a clear understanding of the lingo and the words that she's saying, because a lot of people might not understand what is going on here and why it's happening to so many people. What she is saying here is she has a mortgage. So essentially she has a home and she has a loan from the bank for X amount of years for her home. Okay, cool. You end up getting something called a mortgage. A mortgage is comprised of many different things, and I encourage each of you to do your own research. However, am I not here to help? So we are on investopedia.com in the section that says mortgage payment components. And it goes on to state there are 4 factors that play a role in the calculation of a mortgage payment: principal, interest, taxes, and insurance. It even gave it an acronym. Does that say HITTY? Don't at me. Anyway, now I know a lot of y'all are like, what does all of this mean? Well, it even goes on to break it down for us further. This is what it says a principal is. A portion of each mortgage payment is dedicated to repayment of the principal balance. Loans are structured, so the amount of principal returned to the borrower starts out low and increases with each mortgage payment. And it even goes on to state something very important. The payments in the first years are applied more to interest than principal. Reason I wanted to point this out is because a lot of people are like, I've been in this house for 3-4 years and I checked to see how much of my home was paid off, how much I paid off of my mortgage, just to find out I only paid off a small amount. It's almost like I didn't even make any payments. Where is my money going? It's all a scam. That actually sounds like one of the videos I reacted to a long time ago. Anyway, you may even notice this same scenario popping up in car payments where you're not really making a dent in the beginning and it feels like it's taking you forever to see some progress. Now, it goes on to state that the interest is this. Interest is the lender's reward for taking a risk and loaning you money. That's an interesting way to phrase it, but okay. But it goes on to state the interest rate on a mortgage has a direct impact on the size of a mortgage payment, and it goes on to state something very important. Higher interest rates mean higher mortgage payments, which is why a lot of people want the good old days where people were getting a 2.75 interest rate on homes. They don't want a 6%, they don't want an 8, and single digits, absolutely not, because that can be the difference between your mortgage payment being, for example, like $1,000 and it being $2,000. Now, this is the part that I think a lot of people are feeling. Taxes. And it states here, real estate or property taxes are assessed by government agencies and used to fund public services such as schools, police forces, and fire departments. One thing I want to point out here is, do you notice how it didn't care if you had kids or not? If you are a home owner, This is what you're paying for the public services such as schools, the police forces, and fire departments. The reason I want to point that out is because many of you online don't understand why a lot of people get upset with a lot of the things going on in their community. It's because they likely own a home there and they pay property taxes, whether they have children or not, whether they need these services or not. The funds are allocated and sent wherever it needs to go, you know, after a lot of voting and things like that. But it comes from the people in that community. Now it goes on to state, taxes are calculated by the government on a per year basis, but you can pay these taxes as part of your monthly payments. And this is what we're seeing happen to a lot of people. It says here, the amount due is divided by the total number of monthly mortgage payments in a given year. The lender collects the payments and holds them in what? Escrow until the taxes have to be paid. Escrow is an account. So when someone is saying, like the woman who we were just seeing here in this video, that she knows she is going to have to pay because there's not enough money in the escrow account to cover the taxes, what she is saying is, I have this account with the bank, the lender, if you will, who gave me this loan that's supposed to cover all of the taxes for the year. But guess what? When taxes go up after they go around where you live and they say, wait a minute, y'all done built this thing up. Y'all building all these houses. Y'all got shopping centers over here. Y'all are developing. The road's looking good. People are moving here. Oh my, y'all got a park now. You're doing all these good things and you live in this community? Oh, your house? No way. It's worth $200,000. Well, that house gotta be worth like $300,000. So because of that, you know, your home value going up and stuff like that, and a lot of other factors that can happen. They say you need to pay more taxes on this house because we did an analysis. An analysis, y'all. That's what they do, where they say, hey, this is how much we think this is worth. Yesterday's price, or may I say last year's price, ain't this year's price. So cough up more money so then we can do what? Fund public services such as schools, police forces, and fire departments. And there's more than that, y'all. There's more than that. But it's a big circle. And I just want to point it out because this lingo is very new for a lot of people watching. Home ownership, it is confusing. It's a lot to unpack and understand. But this is telling you, hey, if we go in that account, after we looked at your humble abode that ain't so humble to us no more, and you ain't got enough money in there, guess what we finna do? Next year, because you had a shortage in escrow, those payments that you were sending us before, it ain't gonna be enough because you were coming up short in escrow, which is the account that has your property taxes in it, the money you need to cover that. So what did they do? They say, hey, we need you to pay more money so you're not behind next year. And you might even have to catch up from the last year or make one lump sum payment. That can happen too. I know from experience. Might have to make a lump sum payment. These sort of things can be discussed, but you need to know what your options are. Now let's continue. Another thing it goes into is insurance. Not only can the property taxes go up, your insurance can go up. Why? Because when does insurance typically go down? Like, hello. Year after year, we typically see insurance rates for almost everything go up. Do we not? Your house is no different. And I advise everyone, shop around, get the best rate and the best deal you can get. Do your due diligence. But insurance, your insurance goes up. It could affect your mortgage, the payments that you're used to submitting. And it goes on to state that there are two types of insurance coverage. And those two types may be included in a mortgage payment. One is property insurance, which protects the home and its contents from fire, theft, and other disasters. The other is PMI, y'all, which is mandatory for people who buy a home with a down payment of less than 20% of the cost. People with a VA loan laughing at this. They're like, what? Who did what? Terms and conditions may apply. Not to everybody. If you know, you know. Now, it goes on to state, this type of insurance protects the lender if the borrower is unable to repay the loan. I do want to point this out. This is important. It says, while principal, interest, taxes, and insurance, what we call it, PT? Anyway, you know the acronym. While those things make up the typical mortgage, some people opt for mortgages that do not include taxes or insurance as part of the monthly payment. With this type of loan, you have a lower monthly payment, but you must pay the taxes and insurance. Now, a lot of people do that, but guess what? You're gonna get sent the tax bill, and when that tax bill comes, you pay it. You don't call the lender like, hey, we good, we straight, we got enough money in there, and then maybe be disappointed. No, it's on you to pay it. And with that, you will see the rises, if there are any, of what? Your taxes and your insurance, because it's gonna come straight to you. It's gonna come straight to you. And then you're gonna be like, wait, why are you increasing me? What happened? This is where you might start asking questions. What do you mean my house is worth all of this and I gotta pay more on taxes? Wait, what do you mean my insurance is going up? Why? Why is my insurance going up? And now that we are all up to speed, hopefully, and we understand these somewhat confusing terms, this video should make a lot of sense now. Context does matter.
And because I have a shortage in my escrow. Thank you, City of Chicago. Thank you so much for making it even harder on homeowners. Thank you so much.
Now, again, she has a shortage in her escrow. So something has happened here. Enough money was not put aside, and due to this, unfortunately, she has to pay more than she's used to paying.
Y'all, guess what happened? My mortgage is went up to $2,500.
Yeah, $2,500 to be exact. And she got smoked for the city of Chicago. Now, I know a lot of y'all are going to be like, her mortgage didn't go up. This is why, you know, when people are debating about the verbiage of people saying their mortgage went up or things like this happening to them online, it's important to explain what they're talking about, because there's like this whole thing on social media where people are like, your mortgage doesn't increase, your escrow went up, and so because your escrow went up, the amount that you have to pay monthly went up, but that's not your mortgage. What they are saying is everything combined. That one payment that they're submitting to the bank, which includes insurance, taxes, principal, and insurance. When they're talking about all of that, that's what they mean. And this is a very upsetting thing to happen. Now, there is a whole group of people who may not understand why people might have to sell their homes. It's a lot of situations like this. They can't afford the monthly payment anymore. At one point they could, but the thing about property taxes and home ownership is, in some areas, the property taxes have skyrocketed, and the people who lived in those communities are forced to move somewhere else because year after year, they might not have $15,000 for the county. They don't got it. They're like, when I came here, I was paying $4,000. Now you want 15? And then you got all these other life circumstances that might be happening. On top of that, pay your property taxes. On top of that, your insurance is going up. It can be too much. And it's not even that some people can't afford the house. It's all the things that come with the, like, can spread you thin. It really can. Now, I want to go to the comments. She recently posted this. It says, on top of my house flooding, guess what happened today, friends? Yep, you guessed it. My mortgage went up. This is being a homeowner. And to be honest, I'm done with it. Dang. But this is why I wanted to show you all this. It's not necessarily to scare anyone. This is the reality. It really is. It's the reality. The part of homeownership that many people don't sit down and explain to you like a 5-year-old. And this is the stuff that needs to be explained to you until it just hits. I don't care how many times you gotta watch this video. Watch it over and over and over until it is marinated on your soul and on your spirit and your brain how this works. I don't want anyone to be like, I didn't even know something like this could happen. I just thought everything was, you get a mortgage, that's the payment forever. What's the problem? It's a lot more to it, y'all. It's a lot more to it. Now I'm gonna read the comments. It says, it's okay, take a breath and try to be calm first. Call the mortgage company. You can tell them you can't afford the new payment. Ask them to take the shortage and spread it over 5 years. Ask for the max you can spread it. That will lower the amount it goes up significantly. She goes on to say all mortgage companies don't do that. Don't call customer service. Ask for escrow and insurance department first. The same exact thing happened to me when I was going through my divorce. I was broke and my payment was going to go up almost $1,000 a month. It's going to be okay. Now, this isn't financial advice. I'm not a professional, actually. I just like to read stuff and yap on the internet. But I will say this. You see how many people have this same experience? $1,000 a month extra. And I'm noticing something. I'm noticing a lot of houses on the market. A lot of houses on the market. With inflation, cost of living going up, a lot of things, I think a lot of people are starting to feel it. That's what I think. And I just want everyone to have the knowledge of these sort of things so these things don't happen to you or somebody you love. Yeah, and people said, yep, homeownership is great until they run that escrow analysis. Others saying mortgages can go up. I'm not going to, look, hit rewind, okay? Hit rewind. I can't do it no more. See, and then here we go. Mortgages stay the same. What goes up is property taxes. The thing is, I know what y'all mean. Like, I'm here for the people that's like, y'all being all technical. What they mean is the same thing you mean. They just ain't saying their property taxes went up. Goodness gracious. Somebody said, same thing happened to me. Mine increased over $1,300. I have cried many tears. I'm officially done being a homeowner. I'm selling and going back to renting. This is no longer a dream for me. It's a nightmare. Woo. And y'all are confirming exactly what I was saying. This says my coworker had to sell hers because her payment went up, couldn't afford it. And as sad as this situation is, she is absolutely not the only one.
My mortgage payment increased from $5,400 to $7,129. And I'm going to explain to you why so it doesn't happen to you. For context purpose, I own a multifamily in northern New Jersey where property taxes are insane. Anyways, I bought my multifamily and a few months after I purchased, I received my new tax rate, I guess you can call it. Do I know the correct terminology for everything? No, not right now.
And don't get smart in the comments. We already said we know what they mean. Let them live, y'all. Oh my gosh, let them live. Let them get the story out. Simone, hit play. Let them get the story out too.
But I'm going to explain to you in simple terms what it is. After I bought my house, the city reassessed my property taxes and let me know what my new rate was going to be, which increased to $15,900 something.
They essentially said, ma'am, oh, you rich. Who you feeling like? The Kardashians? Is this Calabasas? I don't know where they live. But when they did the analysis, they said that you was living large and you got to pay up. Y'all see how I just translated? Okay, good. We're going to do more of that, because it's better that way.
When I did my mortgage payment was calculated off the property taxes that the previous owner was paying. They were paying about $5,000. So there was a big difference. My mortgage payment now, not my mortgage payment, my mortgage company pays my property taxes and I pay them monthly. So what happened was it caused me to have an escrow shortage. Escrow is the money that I pay monthly and they use that money to pay my property taxes, insurance, and etc.
Yes.
So what happened now is I have a negative balance in that account and I have to make up for it. So that caused my mortgage payment to increase to $7,129. This happened 2 years ago. Obviously, I didn't have the money to pay it all up front. I could have paid the money all up front and then my mortgage payment would have increased, but it wasn't going to be that significant. I mean, yeah, it would have been significant because my property taxes went up like $11,000, but it wouldn't have gone up to $7,129. So I've been paying monthly and my mortgage payment now is $6,729. Once I'm done paying off the escrow shortage, it'll go down like $500. So when you do your mortgage, make sure that your lender is calculating what your property tax is going to be when you purchase a house, not based off the previous owner's property taxes.
I don't even know. To be fair, when you're getting a new home or a home in general, you don't really absolutely know how much you're going to be paying. And I'll be totally honest. This is where, if you don't know things like this, you can get caught up. You could get put in a bad financial situation. A lot of the realtors are literally going to look at how much was this home that you're looking to get into assessed at the year before and say, you know what, it should be $2,000 because the previous owner was paying $2,000. While that might make sense, what you also need to think about is that's not a guarantee. Every year is a new tax bill sent. It's like a mystery box, if you will. It's like getting a bill in the mail and you're like, huh, how much is this one going to be? That's what happens with property taxes. You don't know. It could be 2,000 one year and the next year it can be 11. You could go from 2,000 to 15,000. Like, it's the luck of the draw. It's like, this is what you getting. But I will say, if they building up where you live, you have a higher chance of seeing increases. I will say that, especially for people who are getting new builds. There's not much to assess. There's not any homes in the area to be like, yeah, like this is what it's looking like. And a lot of the new home buyers get got because they're like, oh, when we calculated how much we could afford to live in this house, we're calculating it off of nothing being here. This area isn't built up yet. And you know what? They drop all them houses there, make a nice subdivision, add parks, recreation, swimming pools, dog parks, and digress. All the nice things, right? Now the county want $10,000 out of you every year. You thought it was going to be $2,000. You thought it was going to be $2,000. And guess what? Every year it's getting higher and higher and higher and higher and higher and higher. This is why if you're going to be a homeowner, emergency fund, I don't even feel like that should be up for debate. And if you looking at what you think your estimated mortgage might be and you're like, I'm cutting it close, and you do it anyway, that can go far left real quick. Because every year you don't know what you're going to get. You don't know. And I want to point out, do y'all see how hard it is to even explain all of this? It's a lot of lingo. Even people who own homes can't, a lot of the time, explain what is happening to them as far as their escrow and their mortgage, because they probably just have like the most basic of knowledge, like just getting hip to the game, but they already in the game. You see what I'm saying? But they just getting hip to the game after the game done started. And I love these videos because they actually do help people who have the knowledge and want to better understand what is going on. Because at some point, even the person watching this who might have all the knowledge on this didn't know any of this. All of us start not knowing some stuff. So it's never to shame anybody for not knowing. It's to spread awareness. And we need more people telling people things that people didn't tell them. We need it. We need it. Now, this comment says, no one can convince me that buying a home isn't a scam. Another comment saying, honestly, $5,400 for a mortgage starting off? Crazy to begin with, friend. But she said, to be fair, it's a multifamily though. Hey, she might have some tenants in that other one. We don't know. That might be good for her. So this is a great comment. It says, dang, neither the lender or the real estate agent didn't explain this to you before you bought. She said, nope. She said, nope, y'all. Honestly, not even sure whose job it is to tell me. And I believe her. I do. Like, I believe it was on a little sheet of paper. That's as far as it probably went. Hey, okay, this is what we can give you from the bank. Because they're going to tell you your interest rate, what the monthly payment is looking like, an estimated property tax that might be up in the air. Like, if it's a new build, it's a little bit wacky. Your insurance, maybe, like, they might have told you how much your insurance was going to be. But my point is that they're not just sitting down and educating you like on all of this lingo. They're not. They're going to give it to you like that and you figure it out. But once you sign and close on that house, it's your problem because you had all the paperwork there. You should have understood it. That's how most people are probably seeing the situation. But I also know that in reality, a lot of people have such a desire to be homeowners because it's a big achievement. It is. To own a home, it's probably a lot of people's dreams. And in the midst of all of that, there's all of this verbiage being thrown at you and nobody's really taking the time to break it down Barney style. You want to know why they're probably not going to do that? Because the lender, for one, has interest in you getting that mortgage. They about to get broke off. Essentially, they're going to get something off of you closing that deal for the house. And guess who else is? The realtor. So do you think they want to tell you something that might scare you off a little bit or make you rethink how stuff really goes? Probably not. Probably not. You know, if you're in a new construction area, you think they're going to tell you, yeah, your property taxes might jump up like $5,000. You prepared for that? You think they're going to tell you that? No. You think they're going to tell you like, hey, if they start building all this other stuff and you moved here because you knew they were building all this other stuff and you barely can afford it and you got 2 kids and you try to take care of your parents and you got a dog, he need a hearing aid, you got 2 mortgages, you stressed out, you always at work, you absolutely need your job, so does your husband. If anything go left, if you even out of work for 2 weeks, everything's gonna crumble. Do you think they're gonna tell you, hey, this mortgage, the amount you're sending to the bank, it could change? You think they wanna tell you to what extent that can happen? So they could get shook out their position, you know, the position that you're about to put them in for commissions and things like that. And this is why we're having a conversation. This is why we're having it. Because for them, it's just business, y'all. It's just business. They might even feel like, hey, your parents should have taught you this, or you should just get on YouTube and watch Social Simone rant about how important this is. But you didn't do that. You didn't send it to a friend. I digress.
My wife and I bought our house end of 2024. So we've been here for almost a year and a half. And this has been basically our mortgage payment every month, $37.41.72. And just as like a, insight into home ownership, our property taxes recently went up, exactly what it was. But yeah, that's our new amount right there, $45.36. So we went up $750 per month, over $7,000 a year more. And most of it goes to the interest, obviously, as we know. But yeah, this is how people aren't able to stay in their houses forever and lose their houses. Crazy.
What's crazy is he just posted this 2 days ago. Mercy. Now I want to read this. He said, our property taxes recently went up. And in effect, our monthly mortgage payment went up too. That's essentially what people are saying, y'all. When the property taxes go up, they go up, so does the mortgage. And then the monthly y'all got it. Okay, good. Now, our monthly mortgage payment went up basically $800 per month without any type of notice. Imagine you've saved all your money for so long to buy a home. And after 16 to 17 months of steady payments, they increase your monthly payments by 21.2%. Simone, get it together. And you're supposed to just figure it out, right? Now they go on to say, I'm not posting this to brag or to cry for somebody to pay the bill for me. I simply wanted to provide transparency for homeowners and non-homeowners alike, so they too can be aware of the possibilities during homeownership. And I agree completely. And y'all, they're just echoes of the same struggle in the comments. This comment says, I've been in my house for about 5 years, started at $1,800. Now I'm paying $3,200. Tell me how that works. And goodness gracious, where do you live? So I'll never move there. Because what? Either the property tax or the insurance got to be extremely high. And another comment says, and only $470 is going towards the principal? I'm sick. The creator says, sick to my stomach. And again, he said he's in that first 5 years of being in this home. And this is what people see. They're making the payments and it's not making a dent, because we covered that earlier, that you likely won't see it make a dent in the infant years of you being in that home. But as that's going on, the property taxes are rising, making you think, man, should I even stay? Can understand why people are questioning. Now, this person here is mentioning to ask for a homestead exemption. Absolutely. Why not? Why not? If you qualify, you never know. And that is kind of like on a case-by-case basis, y'all. So do some research. But a lot of people qualify for homestead exemptions. And it's definitely helpful, because then you don't have to worry about paying the property taxes. Or maybe at least, like, they might even do some sort of percentage. Do some research, but look into it. But I need to know what y'all think about all this down below. Is renting more for you or homeownership? Have you seen an increase in your mortgage due to things like property taxes, home insurance? If so, comment down below, because you never know who you're helping. But I know one thing, we got to start making better decisions today in order to have a better future.